warm welcome to Nirmal, ladies and gentlemen. I'm Hiral, Dadia. We have with us Anantha, Nageswaran, part-time member PMEAC, joining us on the show. Anantha, we've been talking about what's the impact. I mean, everyone's already spoken about what the impact of COVID-19 has been on the economies across the globe, on what's happening with India as well. My first question coming to you over here is that now with the stimulus package that has been announced by Prime Minister's office so far, there have been a lot of reforms that have been announced in different and varied sectors. What is your assessment of this stimulus package?
First of all, thank you for inviting me, and I would like to clarify that I'm speaking in my personal capacity and not as a member of the Economic Advisory Council to the Government of India. First of all, I wouldn't classify this as a stimulus package. I would classify this as an economic support package. A stimulus is to stimulate economic activity. This is to make sure that some activities do not collapse even further. So I would consider it some sort of a support package. And as we know very well that many people have said that the support package is somewhere in the region of 1 to 1.5% of GDP. Together with structural reforms. So while we can quibble about whether the support quantum is adequate or not, given the starting point of a high combined fiscal deficit, union and the state governments, and the fact that we might need further support down the road as well, if the economic activity reopens only very slowly, then I think on balance, combining a modest support with a lot of structural reforms that are positive, medium to long term, to me it appears as sort of the right way to go.
Right. But right now, the major argument, Anand, that everyone is talking about with regards to the package is that this is more of a credit package versus a stimulus or a fiscal package, which was the need of the hour. Any debate on that front?
Sure. I mean, that's a reasonable interpretation. But if you look at the original March 26th or 27th, the Garib Kalyan package, which also put some money in the accounts of people, and the new one, which is going to enhance the allocation to Enrega. And then the more important thing is the measure that is aimed at medium to small enterprises, which is the emergency credit facility. That could be classified as a liquidity measure, but it's also a measure that should provide cash to these businesses to be able to meet their employee cost obligations. So it is a combination of liquidity and cash support. And then on top of that, the government said it would clear payments to people, state governments, arrears of income taxes, contractors, etc. So I think it is a bit of a stretch to classify this as liquidity measure alone. At the end of the day, the aim is to put cash in the hands of people so that they can meet their daily expenses and so that they don't get pushed down into poverty, or in the case of businesses into bankruptcy or closing down. So I think so we can once again debate the quantum, but I think I wouldn't classify them entirely as liquidity measures, because there's quite a bit of element of putting cash in the hands of people and businesses.
Right. But how much? So, for example, let's just take the example of the credit line that is being passed on to various businesses, say from MSMEs to, different sectors as well. Now, the crux of this is, Anand, that there needs to be transmission that needs to happen from the banks to the lenders. If that does not happen, the package actually does not hold any crux.
Absolutely. I think it's always the case that when it comes to government measures, as we always say, implementation is the key, and that could be said at any point in time in the last 73 years since independence. Implementation is the key, and in the case of the financial sector, I understand that transmission is a key challenge, given that public sector banks have been in the last 2-3 years been reluctant to lend. And that is why you have the 100% credit guarantee here. That should make them relatively less relaxed and less worried about the repayment. Of course, speed is of the essence here, and these schemes have to be notified, and also the fine print has to be as clear as the original intent. If the fine print becomes a little too cautious, then the underlying purpose will not be served. So I agree with you on all those things, that it is not a done deal, and ultimately the proof of the pudding is in the eating. How many businesses stay, how quickly the economy rebounds next year, how many people do not get pushed into poverty line, etc. Unfortunately, of course, all these statistics will be available to us with a lag. So the government has to be very consciously using its informal channels and district magistrates and district collectors, etc., to figure out whether its measures are actually getting implemented and, as you correctly put it, getting transmitted to the end businesses from the banking system. I think that is the key, and there can be no two opinions on that.
Right. So overall, when we look at estimates at Nirmal Bang as well, uh, if you have to talk about the package, Nirmal Bang's estimates, I mean, as we estimated, tell you that it's almost around 10% of the GDP. But if you have to actually see the fiscal impact in terms of the cost to the government, that's barely say around 1.1 to almost a percent and a half. Do you think
Yeah,
this
that is,
much on the fiscal side is enough to stimulate the economy post a pandemic like that?
yeah,
And
yeah.
this will be enough to see the revival that we actually want to see?
Yeah. So I think this point also has been widely debated whether the actual on-budget extra spending is adequate. And I mentioned that myself in my earlier remarks. One can have a legitimate difference of opinion on that. And certainly the 10% of GDP size, which is the total size of the package, including the liquidity measures, moratoriums. By the way, we have not taken into account the support measures announced by state governments. After all, in every other country in the world, they have taken the general government support into account, which
Correct.
general government includes union, federal, and the state governments across the world. So whereas India is still talking about union government plus liquidity support given by central bank. So we are still undercounting the support provided by the government system to
Hmm.
the economy. That's one. And second, yeah, it is a balancing act, and it is very easier to be wiser in hindsight or wiser from the outside. The government is trying to create a balancing act between short-term imperatives and medium-term fiscal prudence and stability, sustainability, etc. And that is why they thought they would combine around 1 to 1.5%. Let me come to that a bit a second later, along with the medium-term reforms, which will send a positive signal to the private sector. Now, this 1.5% or 1.3% or 1.2%, whatever people say, does not take into account the fact that the credit guarantee trust corporations have to be capitalized if they have to extend 100% guarantee on the loans given by the banking system to MSMEs. So that recapitalization amount will increase depending on the amount of guarantee that needs to be given. So there is an inbuilt fiscal stimulus or fiscal on budget fiscal spending there, which is difficult to estimate at this point in time. So depending on the amount of capitalization that the government of India has to do on the credit guarantee corporations, the final amount of on budget fiscal spending could end up towards closer to 2% of GDP or even higher than 1.5% of GDP. That we don't know yet.
Right. And as you mentioned about the MSMEs as well, Anand, do you think there should be a few relaxations that need to come in from the government on the MSME front? Because again, if you talk about the collateral-free loans, if you talk about the government-backed loans for the MSME, the criteria is still stringent and hardly, I mean, 45 lakhs is what is the number of MSMEs that is covered. Whereas if you see the number of registered MSMEs on the, in India is almost around 6.5 crores. Do you think a lot of them are left out and these are the small guys who actually need this support right now?
So, there is always a trade-off in real life, not just as a part of the pandemic response, but even otherwise. There is a trade-off between feasibility and desirability, and one needs to, and in the end, a lot of people will feel dissatisfied, and that is par for the course with respect to any scheme. And if some of them did not, are mainly one-person enterprises, and if they did not have a formal book of account, etc., they probably would benefit from other schemes such as the Jan Dhan Yojana, cash topping, or the food subsidy, etc. So many of them could be subsistence enterprises, and they need to be supported on a different basis as individuals rather than as businesses. But when it comes to supporting businesses, you can only support those businesses whose names are registered, who can be tracked, who have a bank account, who have a credit history, etc. That is inevitable. So many businesses falling between the stools is a reality, and I agree with you. But out of the 6.5 crore businesses you mentioned, some of them could be just one person sole enterprises, and they should be supported as citizens and not as businesses.
The reason, Anand, I'm making this argument right now is that in one way, as a country, we have been really supporting Make in India. Startup India is something that we have been focusing on as well. And in that midst, we have a lot of companies, lot of entrepreneurs who've come on board, got businesses on board as well. And this is the time where they are the guys who don't really have the capital with them. They don't have the bandwidth in terms of finances. And that's where the support needs to then come in, because these are the companies who are actually supporting the economy in some way on the employment front as well.
Absolutely. And that is why I think that is why the government has taken the step of giving them 100% credit guarantee so that there is no doubt whatsoever, clearly. And also the redefinition of MSMEs to allowing them to grow all the way up to 5 crores before they become a small enterprise. A micro enterprise becoming small can push out until 5 crores of rupees. And then the promise to clear all the payments and dues. And then you must remember, this government over the last 2-3 years has been making the trade receivables discounting platform important, mandatory. I know that it has not gone to the point where it definitely has a maximum impact, but over time, I think more and more businesses, including government enterprises, will have to register themselves on the trade receivables discounting platform so that MSME suppliers get their monies quickly through their bills being discounted in the platform, and then the large buyers will pay the financial institutions later. So you must see this as part of the ongoing process of making MSMEs self-standing with access to finance, and this redefinition of what constitutes young, what constitutes yes, what constitutes medium, etc., will also keep them in good stead in terms of the future ability to generate employment and grow and be part of the startup and Make in India. So I think the package per se, the important thing for me is how quickly it reaches even these 45 lakh enterprises, and also the cost of the loan. Given the credit guarantee, it should be priced reasonably low rather than the original rate of interest. And that to me are the key concerns rather than the number of enterprises that would get left out. Because as I said, they should be supported on a different basis as individuals.
Right. That's an interesting point that you've made, Anand. But with that now, if you have to talk about the revival of the economy as well, post the packages were announced, a lot of private institutions as well, which have come out, credit rating agencies that have come out and actually cut the GDP forecast as well. Now, tomorrow, I think, is the crucial day again where everyone will be waiting with regards to the estimates that would be pouring in when the Ministry of Statistics and, MOSPI will release the provisional estimates for FY20. What's the sense that you have in terms of a slowdown course with whatever is the kind of lockdown situation that we've seen? The quantum of GDP that we've already lost in the first 60-65 days of lockdown, and with the slow growth that will continue for a couple of months from here on, what are your individual estimates indicating?
It will be presumptuous on my part to say that I have an estimate simply because I don't run a model and I don't have a national GDP spreadsheet for me to say I have an estimate of my own. So therefore, I can't give you an estimate, and I do see that the estimates range from as low as even some of them are still positive to as weak as -5%, which was the latest estimate that came out from Fiscal, and there are many estimates in between. So I really don't want to add to this plethora of estimates that are out there. Yes, it is going to be tough, and we can do our own back of the envelope calculations based on number of days of shutdown, based on the GST collections that are happening or not happening. And given that GST covers 40% of the economy, we can estimate what will be the impact. So I think contraction appears inevitable given the situation, given that lockdowns have not been fully relaxed in many states, and most of the red spots remain the key economic activity zones, etc. So I think we just have to choose a number that suits our preconception among the various estimates available from the private sector. I don't have a number of my own.
Right. And with this, but do you think another stimulus package is something that would be required from the government from here on to, spur and let that momentum continue, what will be got from the first tranche?
Well, as I said, the first tranche, I wouldn't call it a stimulus package. It was a support package just to keep the system afloat rather than stimulate. Stimulation can come after the economic, after the all the lockdowns are lifted, which could happen hopefully by end June or even earlier, or in the worst case scenario, maybe up to mid-July or whatever. Then you still have about 8.5 months of the remaining financial year, and the government can see which activities are able to come back to normal and which sectors are unable to come back to normal, and then provide support and stimulus so that they can also come back. So I think that there may be a requirement, and the finance minister has clearly indicated that she is open to Atmanirbhar package number 6. That's what she said. And so I think the government also probably has kept some more additional capacity with itself to be able to respond to situations as and when they emerge. When the lockdown is fully lifted, data become available, and there is the clarity on who and which sectors need support and which don't, etc. So I think there is a very good chance that the government is keeping its options open on further support to the economy down the road.
Right. And, with all of this, if you have to look at India versus other countries as well, in terms of the packages that have been announced, in terms of the growth forecasts that have come in from different agencies, where would you actually place India versus the other emerging economies?
Well, I think India relatively is better off because India's external balances are far better. Even if the government were to aggressively pump prime the economy down the road, the impact on the currency may not be there because India has a huge amount of foreign exchange reserves and it is not taken too much of loans from foreigners. And its current account is going to be in surplus this year, even if it's a small one. And the continued prevalence of oil price in the region between 25 to 35 is going to be also supporting the Indian economy. So, but the biggest issue or the hurdle that India faces going into the recovery mode sometime in the third quarter onwards, third fiscal quarter onwards, will be the health of the financial sector. And I think from a medium to long term perspective, how well India recovers and gets back onto the growth track, because after all, even in the year ending March 2020, our growth rate was maximum 5% or slightly lower than that. So in order to get back to 6% GDP growth, getting the financial sector back on track, and that includes not only the banking system, but also the non-banking financial system. That is the key. And that is what will give us a better handle on how well India will do compared to other emerging economies, even though India doesn't have too many other imbalances that emerging economies have. But offsetting that, India has two drawbacks. One is that the fiscal situation is already on the weaker side. If you look at the consolidated fiscal deficit and the overall debt situation. And the second important Achilles heel for India is the health of the financial sector. Those two have to be. The second one has to be addressed relatively urgently for us to speak with more optimism about India's medium to long-term economic growth prospects.
Right. And very lastly, Anant, let's talk something positive. With regards to one silver lining that we've been noticing over here is with regards to where agricultural growth is concerned. Everyone is expecting that to remain stable in the country, and this is mainly on the expectation of a good monsoon. Secondly, we've already been staring at a recessionary phase pre-COVID as well. So with all of this, with the kind of dent the pandemic has had in terms of disruptions, it's giving India an opportunity as well, on the export front. So if you have to talk from the export front, if you have to talk from the agricultural front, do you think these two are silver linings for us, which could be great sources of revival?
No, there are silver linings, by the way. So, for example, you mentioned about even before the pandemic, there were indications of recession. That was not the case. In fact, India was looking at a very gradual recovery in the economy before the pandemic struck. So I wouldn't say India was facing a recession pre-pandemic. That's one. Number two, talking of silver lining, I mean, even now the number of deaths in India are far lower than what you would see in the standard tuberculosis situation. I mean, with the tuberculosis, India was losing 1,500 people per day. So just about 2 or 2.5 days of fatalities from TB are the ones that we have experienced so far with the COVID virus. And data from Italy tells us that 96% of the fatalities occurred in population who are very old, above 80, with pre-existing conditions. So the flu itself is not as lethal. In fact, if anything, the biggest positive and silver lining has to be that we have to tell people not to be overly afraid of this. Now, agricultural sector, clearly many states and the union government have come out with important empowerment of farmers. And if the monsoon turns out to be right, then the agricultural sector, which is still about somewhere around 20% of GDP, can prove to be one of the important growth stabilizers. As far as the export sector is concerned, given the weak global demand and uncertain global demand, I wouldn't expect the export sector to play a big role in the short-term recovery prospect. But that is important part of the Make in India, because unless we benchmark ourselves globally, Make in India also will not work. Then it will become an insular economy. So I don't see export as a short-term growth revival driver, but as an important component of the medium-term growth revival strategy. But in the short run, you're absolutely right. Along with the economic reforms and the fact that the rural economy has been untouched by the virus, relatively speaking, agriculture can turn out to be the mainstay of the economic recovery in the third and the fourth quarter of this year.
A good point made as well. Thank you, Anand. In fact, we know you're running out of time. We will call you once again once things start improving, once we get a few numbers on board as well from the government. But thank you so much for joining in. And it was an insightful conversation that we've had. Thank you, viewers, as well.
You're welcome.